Imagine a year from now being $100,000 wealthier because of real estate investing. Your life, your family's life, could be drastically different by the time 2024 rolls around. But time moves quickly, and if we don't make a plan to get there and then execute it, we could look back and have 2023 be filled with regret. Since the early days of the pandemic, I've made it my mission to figure out how to use real estate investing as the starting point to financial freedom and at least your first $100,000 year. I've tried a ton of different strategies, from wholesaling to try and make a couple of grand to evaluating multi-million-dollar apartment complexes. Not everything I've tried has worked out, but where I have found success, it's completely changed my life. And I'm not ready to stop just yet. Going into 2023, I'm using all of these experiences to craft a plan that will make this my best year in real estate yet. And in this video, I'll show you that exact plan. I'm sharing which strategies I'll use, how much I need to make at each stage to stay on track, and maybe most importantly, potential pitfalls to avoid. I've been combing through advice from real estate investors and financial analysts, and investing in 2023 definitely isn't without its risks. With a potential recession looming, rising inflation, and rising interest rates, there are certain things I'm avoiding on my investing road this year, and you'll likely want to steer clear of them as well. You've probably seen the news articles and YouTube videos predicting the crash of the housing market, and it's true that certain segments of real estate have been hit hard and will continue to be. In most of these conversations, what's being discussed is the average price of the average home that the average person wants to buy. But as investors, that's not what we're targeting. We're actually looking for properties that are at the bottom of the market that no average homeowner wants. These distressed properties oftentimes play by a different set of rules, because rather than hoping that the market appreciates and the property becomes worth more, with a distressed property, we can force the property to appreciate through a renovation. And that's kind of regardless of what the general market is doing. Now, yes, there are limits to this, and you can't force appreciation higher than the market will allow, but buying distress means that there's much more room between the purchase price of the property and the potential future value of it, and that gives you much more control over making something a good deal versus buying something that's already at the top of the market and hoping that it turns out to be a good deal. Like, imagine we've got two identical houses, same size, right next to each other in the same neighborhood, but one is recently renovated and the other has structural damage, water damage, and mold damage. So the value of that first one is going to be here, and the value of the second one is going to be down here. And regardless of if the market crashes or if the market grows, there's going to be a gap between the value of those houses that will remain. And that gap is where we as investors can make money. So how do we even find these properties? There are a couple of ways to do it, but one of my favorites is to use a site called PROPSTREAM, who has been awesome enough to sponsor this video, as well as an upcoming free challenge that I'm putting on for you guys through Zoom. PROPSTREAM has a ton of data from different sources, and it organizes it for us to make it simple to find distressed properties anywhere in the country. In order to help you guys get really good at finding these distressed properties and getting in touch with the owners who may be motivated sellers, I'm putting on a challenge with PROPSTREAM where we'll get on Zoom together and go through and do things like finding the best market for you to invest in, whether it's going to be local to where you live or you want to virtually invest somewhere else in the country. We'll create lists of properties that have a high level of distress and therefore a potential high motivation to sell. And we'll even use PROPSTREAM to dig deeper into the details of the property, like how much equity they have, if there's any liens or pre-foreclosure notices, and of course, run comps to analyze the deal. The second half of the challenge is with a CRM platform called Simply, and that'll help us take our data from PROPSTREAM, organize it, get in touch with the sellers, and Simply records every conversation you have, and it does automatic follow-up with text messages, direct mail, and ringless voicemail. And basically, it just never lets you drop the ball on a lead. The challenge will start on this date, and it's completely free, but spots are limited, so go grab a spot using the link in the description, and I'll see you there. And if you're watching this after the live challenge passes, you can still get the recorded version to follow along with. So now that we have a list of distressed properties and know how to work those leads, we want to pursue a low-risk strategy and build up our capital base. The goal at this step is to make $40,000 through wholesaling, and if you do it right, this can be done relatively quickly. Now, no investing strategy is without its risk, so I say that this is a low-risk strategy, not a no-risk. In order to lower that risk even further, while we're finding those distressed properties and analyzing them to get to an offer price that makes the deal work, we're also going to start learning our market and connecting with local buyers in the area. Again, PROPSTREAM is a great way to find buyers. You can also use your local Facebook groups, BiggerPockets forums and go to meetups. The goal here isn't just to ask buyers, hey, if I get a good deal, will you buy it? That's like a completely level 1 basic question. Instead, you want to build relationships by offering value. And I've got a video with more than a dozen real estate related side hustles that you can do to connect with local buyers in your area. You can also start conversations and kind of ask level 2 and level 3 questions, especially when you're in person at meetups, and ask things like how buyers' criteria has changed in 2023. Are they aiming to keep their renovations beneath a certain amount? Do they want to use 70% in their MAO formula instead of 75 or 80%? Their answers are the data that you're going to use to find success much faster than the average new wholesaler. Like, most beginners just kind of look for any cheap property to put under contract, and that's exactly what I did. And then you possibly end up with a deal that no one wants to buy, maybe because you're not adjusting your numbers for the state of the market, or you're buying in neighborhoods that no one's interested in. I once got a deal under contract at such a low price that I thought it was a home run, only to find out that the reason it was so cheap was because no one wanted it and it was in the worst location in a flood zone. This also brings me to our first pitfall to avoid, and that's taking on too much risk too early. There are plenty of mistakes that I've made in my wholesaling journey, but none of them have resulted in me losing money because of the nature of how wholesaling works. And as long as you understand how earnest money deposits work, you're abiding by your local laws, and you're acting ethically with good morals, then the risks that come along with wholesaling are significantly reduced. But if you jump right into something like the BRRRR strategy or house flipping, the risk you're taking on is much higher because you're actually buying the property, going under a renovation, and hoping that at the end you can sell or get an appraisal at a price that equals success. And at this point in the journey, you want to get some reps and information under your belt first before you take on that risk, and while you do that, stack your cash by wholesaling. So once you know what buyers in your areas want, you're going to focus your attention on properties in those areas and only make offers that, if they're accepted, they will be home run deals. I usually expect that I'll need to make 100 offers for every one deal I get, and at this stage, my goal is to make about 40 grand. If you're in a cheap market or a more expensive market, you can adjust that number, but 40 grand is a good middle ground. And so if we want to think about how long that might take, getting to 4 deals, making $10,000 each, you probably need to make around 400 offers. And it depends how much time you have available in your nights and weekends, but the faster you're able to analyze deals and run comps, the faster you'll be able to get offers out the door. So if you need help analyzing deals and you want to use my custom-built calculators to make it go faster, I'll leave a link in the description to my monthly Run the Numbers training program so you can get all of my trainings on analyzing deals for free. And if this feels daunting to you, I get it. Try doing what I did, which was commit to making 100 offers before you give up. I literally had a poster on my wall promising myself that I would make 100 offers and 100 YouTube videos before I quit either one. And just knowing that I had to reach that number before I even considered giving up meant that I could focus on what I learned from each deal rather than constantly asking myself if I wanted to keep going. I got my first deal around, I think it was like offer 83 or something like that, and just the process of like making that lump sum of cash made me want to keep going anyway. The next step is one that most people don't consider when they're wholesaling. Yes, we are pursuing $40,000 in earnings, but we're also going to pursue about $10,000 in savings as well to bring our total net benefit to about $50K. The method we'll use for this is house hacking, but not just in the traditional way that you might be familiar with. House hacking is the idea of buying a property for yourself to live in and renting out the extra space so that you can reduce or even eliminate your housing expenses, and if you get really good at it, you can be making money from the place that you live. Now, some of you might already be thinking that you can't house hack because you don't want to move, you can't get a bank loan, there's no multifamilies in your area, or some other reason. Don't shut down the possibility before you consider it from all angles though. I've house hacked in the traditional way of getting a multifamily property, in my case a duplex, with a 3.5% down payment using an FHA loan. Then I live in one unit and rent out the other. I even used a state-run down payment assistance program to put $0 down out of my own pocket at the closing table. But that's not the only way. You can get a single family property and rent it out by the rooms instead, or get a property with a garage or basement apartment, and if you don't want to move at all, you can still find extra ways to hack income out of where you currently live. I know someone with a big backyard who put a few $100s into an old RV and then put it up on Airbnb just as a place to stay in their backyard. If you've got a big driveway, you could do the same thing by renting out a parking space to an owner who's put their car on Turo. And my dad's a falconer, meaning that he raises falcons and hawks, and before we had a big backyard, he used to rent a small piece of land from another person in our neighborhood so that he can house his birds in there. So you can get creative, whether you're moving to a new place space or you're using the space that you've already got, the goal for step 3 is to lower your expenses or raise your income by 10K. And as one more side note on house hacking, with interest rates rising, it's getting harder and harder to get bank financing, but I've got a deal in the works for the next property I'm gonna house hack, and I'm actually gonna go around the banks. So I'm working directly with the seller for owner financing. I'll keep you guys updated on how that goes, but remember that if you don't have the credit or 2 years of job history, creative financing can be a great way for you to still get into house hacking. And if you're concerned about having tenants, I recently switched over to using a new platform called Tenant Cloud, and that's where I manage all of my rentals now. It's less expensive than hiring a professional property manager, but it still lets you collect your automatic rental payments, you can track your financials, and I think honestly the best part is that you can let your contractors also connect to the app so that they get the maintenance requests and you don't have to worry about changing light bulbs or unclogging toilets. So we're now at 50K, halfway to our goal, and we've learned a ton about real estate investing without taking on too much risk. You're still gonna continue wholesaling, but now you're keeping your eyes out for a golden goose property. This is a property that is distressed and therefore steeply discounted, but it has 2 characteristics. First is that the renovation is only cosmetic. There's no structural damage, no mold issues, no water damage. Just the basic paint, new roof, new appliances, new flooring, and that type of thing. And second, it has a great potential for cash flow. By looking at rental comps, you know that after the renovation, you'll have a ton of potential tenants to choose from, and the amount of rental cash will pay you at least $300 after expenses each month. And it may sound like you're looking for a needle in a haystack, but at this point, you will have evaluated hundreds of properties, maybe thousands, and all of that data and practice will let you recognize this golden goose when you find it. But here's your second pitfall to avoid. Don't over leverage on the financing. Using leverage is when you borrow money to buy an asset, and it is one of the benefits of real estate investing, but it can be overdone, especially when there's market uncertainty like there is right now. You're either gonna flip or burr your golden goose property, and so you're gonna need money for the purchase, the renovation, and your fees, and then after that, you'll make profit. So if you go to a hard money lender or a private lender and you're looking to borrow all of the money you need to get this deal done, one, they're going to be less reluctant to lend to you because it's your first time and you don't have any skin in the game. And 2, even if you do get that loan, it has the potential to ruin everything that we've spent months building. Borrowing 100% of the funds that you need means your deal needs to go about 100% perfectly. There's very little margin for error because as soon as something goes wrong, it cuts into your profit, and once your profit is gone, you immediately become unable to pay your lenders back. But if you don't over leverage and instead you only borrow some of the money you need for the deal and you put the rest in from the cash that you've been stacking, you'll be more prepared for disaster to strike. This way, even if you lose all of your profit, you still have a buffer of money that you put in yourself before you become unable to pay your lenders. Now, it's just morally better to lose your own money than to lose someone else's, but you can also bounce back from losing some money up front and possibly make it up as you rent the property out later. Plus, if you lose your lender's money, they can come and seize the property and put a foreclosure on your record, meaning you're left with no property and likely no one willing to lend to you again in the future. Once you complete this golden goose deal, the goal is to add 30K to your net worth through a BRRRR or 30K to your bank account with a flip. One of my best golden goose properties was a 4-bedroom, 2-bathroom with a detached garage in the backyard. We renovated the front and put a long-term tenant in there, and then we also converted the garage into a studio apartment, furnished it, and now rent it out on Airbnb and to traveling nurses and professors. The main house brings in a small amount of steady cash flow, and being able to show that long-term lease helped us qualify for the BRRRR. And the garage in the back brings in a ton of extra cash flow because it's rented on a short-term basis. This idea of having some investments that build your equity and net worth and some that build your cash flow brings us to step number 5, which is where your focus goes next. For high-risk or highly complex deals, I'll keep wholesaling them to more experienced investors. We can't predict where the market is going, so if you're not confident about a deal, in that case, I'll take the lower risk option, wholesale it, and stack the cash. Then, when we find those golden goose properties, I'll be doing basic BRRRRs, growing my net worth, and increasing my cash flow when I keep it as a rental property. Alternating between these 2 strategies easily gets us to $20,000 more to reach our 100K mark. But if you're gonna pursue this, you'll definitely need to learn how to manage a renovation. I documented my first big renovation, which resulted in this $60,000 check, and you can see the full breakdown of that project in this video right here. But before you go, don't forget to grab a spot in that PropStream challenge, and I'll see you there.